A corporation is a separate legal entity from its owners.
What does that actually mean for me?
It means your business becomes its own person. It can earn income, own assets, and pay taxes.
So I'm not personally responsible for everything?
Exactly. That's called limited liability. Your personal assets are generally protected. Corporations follow a structure called corporate governance.
Sounds complicated.
It's actually simple. Shareholders own, directors oversee, and officers run the business.
So owners don't run the company?
Not directly, they control decisions through voting. Shareholders are the owners, but they don't manage daily operations.
Then what do they actually do?
They vote on major decisions, elect directors, and approve financials and big changes.
What's the risk for them?
Only what they invest. That's the benefit of limited liability. Directors oversee the company and guide its direction.
So they're like supervisors?
Exactly. They monitor management, ensure compliance, and review financials.
Any legal responsibility?
Yes, they must act honestly, carefully, and in the best interest of the company. In small businesses, things are simpler.
How so?
Often, the same person is a shareholder, director, and officer.
That sounds convenient.
It is, but it can lead to conflicts if multiple family members are involved. This is the most common setup in Canada.
Just one person running everything?
Yes, you own all shares, act as director, and manage daily operations.
That sounds easy.
It is, but you still need to keep proper records and follow corporate rules. Your share structure determines control, profits, and tax planning.
Can you give an example?
If two people own 50/50, decisions can get stuck, called a deadlock.
So what's better?
Using multiple share classes. That gives flexibility in dividends and control. As businesses grow, they often create multiple companies.
Why would someone do that?
To separate risk and manage taxes better.
How does that look?
You own a holding company, which owns your operating business.
Benefits?
Asset protection, tax planning, and investment flexibility. One big advantage of incorporation is the corporate veil.
What's that?
It separates you from your business liabilities.
So creditors can't touch me?
Usually no, but if you give personal guarantees or commit fraud, protection can disappear. Even with limited liability, directors can still be personally responsible in some cases.
Like what?
Payroll deductions and GST/HST.
Wait, personally liable?
Yes. If those aren't paid, the government can go after directors directly. Here's the key question. Do you earn more than you need personally?
Why does that matter?
If you take all the money out, there's little tax benefit.
And if I don't?
You can leave money in the corporation and defer taxes. As an owner-manager, you control everything, but also carry full responsibility.
How does money flow?
The corporation earns income, pays corporate tax, and you withdraw later.
What's the advantage?
You delay personal taxes and can reinvest profits. Incorporation isn't just about saving taxes.
Then what is it about?
Structure, protection, and long-term planning.
What's the biggest benefit?
Keeping profits inside the corporation to grow wealth over time.